Hello, everyone. My name is Robert Więcko, and I will be your operator during the call today. And I hope you will enjoy it. Ryan, feel free to take it from here.
All right, perfect. Well, hi, everyone. Welcome to the fourth quarter 2019 Dash Core Group conference call. I'm Ryan Taylor, CEO of Dash Core Group. I'm joined on the call by several members of Dash Core Group, including Robert Wyko, Chief Operations Officer, Glenn Austin, Chief Financial Officer, Bob Carroll, Chief Technology Officer, and Fernando Gutierrez, our Chief Marketing Officer. Moving to the agenda, we'll first share a set of prepared remarks and accompanying slides, followed by a question and answer session, as we've done in past sessions. We've collected some questions on the Dash forum, and we'll address those on today's call as part of the Q&A. We'll try to answer as many live questions as we can from the chat as well within the time we have allotted, and we'll answer any remaining questions that are still in the queue in written form after the call. Keep in mind that this call is intended as an update on the core team's overall strategy and operations. So questions should ideally reflect that intent. More technical questions will be answered in the follow-up forum post to keep the questions at that level for this call. Our goal for the call is to provide an update on Dash Core Group operations and development, to review performance data on the Dash network from the fourth quarter, and to discuss other relevant topics for the community. As with all of our quarterly calls, we'll start with a brief overview of the Dash network and Dash Core Group strategy for those who might be less familiar. We recently completed a periodic assessment of our growth strategies, and we've decided to focus our attention on some of the areas we're seeing the most success. We'll talk a bit about that. We'll also discuss the Dash network's latest performance metrics, which remain strong this quarter. Glenn Austin will walk us through an update on our financials, including our balance sheet and income statement. Bob Carroll will provide an update to our roadmap, including an upcoming release of Dash Core, and to discuss the testing phases for Dash Platform, which is now on a public testnet. And I'll then give an update on our progress against our growth plans and share some of the findings so far from our analysis and how we can improve Dash's store of value properties, a topic that I introduced at the open house that we hosted last month. Before we get into any of the detail, I'd like to share my thoughts on the market overall. So for the fourth quarter of 2019, we saw total market capitalization of digital assets decrease about 13% from 220 billion to 191 billion. The decrease was slightly higher in the altcoin market than it was in Bitcoin, but Bitcoin dominance remained approximately the same at about 68% during the quarter. This remains about the highest Bitcoin dominance level has been since the first alt season began back in 2017. The altcoin market fell approximately 16% during the fourth quarter. Dash's market cap fell by approximately 38% during the fourth quarter, causing our market cap ranking to fall from 17th to 26th by the end of the year. Of course, things have been quite strong this year. We don't know obviously all of the reasons associated with the dip in December, but those certainly included the market overall. And for Dash specifically, it could be a combination of the uncertainty that was introduced with the store value conversation that I started back in December with the community, year-end tax selling. We heard many instances of that being a motivating factor. A large number of masternodes that were liquidated on salt lending automatically due to the price decline, putting additional pressure on. And frankly, a little bit of panic about how low the price had gotten and what that would mean for our ongoing budget. And so we really saw at the end of the year a perfect storm of various forces that were affecting the price. I think very quickly in January, we saw a lot of that downward pressure go away. The Dash network experienced continued growth in terms of user activity, which is really interesting given that it was the fourth quarter and during the holidays, which is typically a period when network activity drops. And year-on-year growth remains strong across a range of key metrics. And in particular, we continued posting transaction count increases both year-on-year and quarter-on-quarter. Excluding the estimated effects of stress tests, we hit another new record for number of economic transactions this quarter and a new record of active wallets. In order to more objectively exclude the effects of network stress tests, we've continued to focus on median number of transaction counts per day. This metric is being used because it provides a view into what a typical day of activity on the network looks like and is largely unaffected by any network stress tests, which have really made our true quarterly growth difficult to assess historically simply by evaluating total transactions. In fact, our growth in median transaction counts increased to a new record of over 16,000 economic transactions per day. Those are transactions excluding Coinbase transactions and excluding private send mixing transactions. And that represented a 5% increase over the previous record quarter. We continue to witness Dash's adoption and growing use in the markets that we're targeting, and we'll talk more about that in a moment. So flipping to the next slide, we'll talk a little bit about what Dash is for those that are less familiar, as with all of our quarterly calls. Our goal is to provide a greater degree of financial freedom for everyone by providing the world with better money. Our brand identity continues to focus on the individual with your money, your way, really highlighting the benefits of Dash. We're targeting individuals, businesses, and developers by addressing problems we see in the payments industry that cryptocurrency and Dash's speed in particular can address. We attract those users with a borderless, fast, inexpensive, secure, and easy to use payment network. We feature instant payments for under $1 with enhanced user security and privacy. These features make Dash ideal for both online and point of sale purchases. The Dash network consists of many components, including the currency itself, which is used to facilitate payments, and the network upon which users interact. And with the upcoming release of Dash platform, we're working towards greater flexibility for developers by introducing the ability to easily integrate applications and build applications designed for use on the Dash network. We believe these are components necessary to compete within the payments industry and deliver value to our users. On the next slide, I'm sure you've seen this slide before if you've been joining these calls. But during this quarter, we released the first components of Dash Platform to testnet. Dash Platform is the primary component upon which all other evolution features will be built. It has been designed in such a way that it's easily extensible and flexible, allowing Dash Core Group or any third party to build decentralized applications and enhanced payment functionality. Because of dependencies, we need to release Dash Platform first, and the network must migrate to that version before we can introduce applications to run on Dash Platform, including Dash Pay. Dash Platform will add application storage and a decentralized API to the network. And once migration to Dash Platform is complete on mainnet, we'll introduce the first application. Dash Pay will allow users to register a unique network-wide username, create contact lists, create a profile, and transact with other users in an easy-to-use fashion similar to Venmo or Cash App. Dash Platform will also enable developers to start building applications for merchants and consumers, including applications that can interact with Dash Pay. Merchant-facing applications will introduce new capabilities that address their unique needs, multi-party access, ability to request profile information such as shipping address from customers, or the ability to issue an invoice through the Dash network. In the future, we'll introduce additional applications, perhaps an offers application or others that allow merchants to interact with the consumers that follow them. We also will have the ability to forward offers, rewards. These are all components that we think can enhance the overall experience for both merchants and consumers. We can't wait to see what other developers will build or how they will take our reference applications and enhance them in some way in order to better serve the market. So on the next slide, we'll talk a bit about how Dash Core Group is growing the ecosystem. Our growth strategy consists not only on a great product that puts users first, but also consists of credible paths to growth in a variety of markets, which we believe are the best fit for cryptocurrency and Dash in particular. Q4 was the first full quarter that we had chain locks and chained instant send live on the network. With these new capabilities, the network is now delivering a user experience and security level that's unmatched by other cryptocurrency networks. Traders and users have taken notice, and there's been a lot of traction getting commitments from exchanges and other services to integrate chain locks and instant send. We'll talk about some examples of those, and we've got more in the pipeline. The markets we're targeting are those with the greatest need and greatest fit for cryptocurrency and Dash, especially due to our unique features, such as instantly confirmed transactions. These markets tend to be underserved by existing payment systems. Prime example here is Venezuela, where we're proving to be a great market for us, not only because of the hyperinflation, but because we're solving practical limitations of the local payment systems. Having teams on the ground there and a Venezuelan on our business development team really helps us understand the needs beyond just the inflation issue. And understandably, over 80% of Venezuelans have a deep skepticism for government-issued currency. Although dollarization is beginning to happen, that may actually be helping Dash to differentiate itself because merchants are open to using many different currencies at this point in conjunction with one another, whatever helps solve their issues. And we're seeing a lack of low denomination bills and smaller change. And so there's a lot of friction in those transactions, even the ones that are occurring in dollars, as merchants may not have change. They could either forego a sale or force the consumer to buy, say, $20 worth of goods when they only wanted to buy 10. And so there's a lot of friction for both the consumer and the merchant in those. And Dash really stands out as a solution that eliminates that type of friction. And merchants just, I think, love the simplicity of accepting Dash transactions. We've seen videos with interviews with merchants that accept Dash that express great gratitude for having the option available. In terms of crypto trading, we're seeing improvement in the movement of value between exchanges using our instant send technology. We've seen a lot of interest in both chain locks and instant send ever since Coinbase integrated Dash and included chain locks in their integration. We've done some analysis and have determined that Dash, although we're ranked 15th currently in CoinMarketCap, we're consistently in the top 10 for market volume on any of the exchanges that we're integrated in. And there's anecdotal evidence that traders are beginning to really take notice of Dash. We received several inquiries during the quarter from major market making or institutional service organizations that were looking to borrow large sums of Dash in order to lend them to traders. Traders definitely recognize the value of utilizing Dash in order to facilitate trades, move value between exchanges, take advantage of arbitrage opportunities. Unfortunately, I don't think anyone with large sums of Dash are operating masternodes, and so they're having difficulty borrowing it. Even if they don't want necessarily exposure to Dash, they have to acquire it if they want to use it. And so I think we're seeing anecdotal evidence that the network effects of more and more exchanges accepting instant send deposits or chain lock deposits is having an effect. And I think we're capturing some market share from other coins that historically have fulfilled the fast transfer of value between exchanges. In terms of remittances, those are primarily focused in the Latin America market, given the size of the market and synergies with the Venezuelan use case. We've managed to stand up a number of remittance partners now that the exchanges are in place in some of the countries that we're targeting. We now have 2 exchanges in Mexico with fiat pairs. One of those is being used for incoming remittances. The other is being used for outgoing remittances. And so we'll continue to build out that infrastructure in other countries. And as we do that, we're able to take the next steps with the remittance strategy. The US cannabis markets, including suppliers such as testing laboratories and complementary products. There, of course, we're partnered with Alt36, and high chargeback industries, where our initial focus has been on online gambling, esports betting, sports betting, and fantasy sports betting. As we've continued targeting these markets, we've learned a lot about what's working best. When we first announced our growth strategy focused on these areas, we went into it intending on assessing those opportunities. We believed in the opportunities. We thought that they were the best opportunities available to us. And we said that we would reassess that and reallocate our resources based on success and learnings. Because of our small team size, we had not yet focused much of our attention from business development resources on the gaming markets. And it's always remained a fairly small portion of our work. We allocated some of our business development capacity towards the gaming markets starting late in Q3. We announced that on the last quarterly call in order to more fully assess the opportunity. What we've done is we've engaged with gaming companies in order to better assess their needs, understand their pain points, understand how the market works. We've done that through interviews. We've done that through conversations with payment processors that serve the industry. We've already been integrated into dozens of gaming sites. And so, and not only that, but Dash is frequently differentiated on those platforms as the fastest deposit method. So it seemed to be getting natural traction. During the quarter, when we reached out to these clients and got a sizable number of direct interactions with them, we learned that the opportunity in gaming is likely more limited than we initially thought. Although Dash would address many pain points in the industry, the gaming companies themselves aren't incentivized to resolve those pain points for their customers. And although chargebacks are high, those costs are baked into deposit fees that consumers pay to make those deposits. And consumers are not balking at those fees because placing a bet is already a highly risky situation in which you could lose 100% of the amount. The gaming operators also want to actively make withdrawals as painful as possible for customers. And the reason for this is it's not a factor consumers consider when they're deciding where to gamble. And by making withdrawals difficult and slow, for example, by mailing a check in 2 weeks, operators encourage users to keep their winnings on the platform and place additional bets. It drives sales for them by keeping it difficult. And so that said, we still think there's a narrower set of opportunities. We are hearing that there is value in sports betting because of the timing issue of those bets. And so that portion of what we're looking at, we think remains viable. So we're continuing to research the market and determine whether this is an area we should invest in, or whether we should use our resources to double down on the other strategies with our limited bandwidth. We'll come back to the network in about 3 months and share more about what our findings have been. Cannabis is another area that in our current assessment warrants pausing further investment until banking and regulatory clarity allows for Dash's direct use with the merchants. Alt36 is our primary partner in the cannabis space, and Dash is utilized in the background to facilitate transactions, though the merchant nor the consumer is aware that that is the case. Direct acceptance of Dash remains extremely challenging for banking, legal, and distribution reasons. For about a week last month, Dash was actually one of the options on Alt36's platform, and it worked beautifully. Users could select Dash as their preferred payment method during the setup of their profile and pay merchants directly from their Dash wallet. However, banks and distribution partners have expressed concerns to Alt36 in order to have that option removed or risk those essential relationships that they have and are needed in order to operate. While there are banks that currently service cannabis clients and banks that service crypto clients, we've not been able to identify banks willing to bank both types of services that Alt36 requires. They've also signed up a number of partners whose banks also are not structured to address both cannabis and crypto. And therefore, their partners are equally concerned that distribute the Alt36 solution. So we're working with Alt36 to educate their partners on how the system operates. We hope to win approval to turn the direct acceptance back on and have the ability to market that capability. But until those two things can happen, we think it makes little sense to continue building capabilities we can't reasonably deploy or market. I think that over time, we can address the bank's concerns, and we'll continue to put time into that, but not necessarily money, in hopes of making a breakthrough there and allowing that feature to be turned on. Given we only have 2 staff members dedicated to business development strategy, we will be focusing almost all of our efforts going forward on the first 3 growth strategies and doubling down in the areas in which we're already succeeding and making rapid progress. I believe this shift in focus will allow us to accomplish greater benefit for Dash than we could achieve by continuing to focus equally on all 5 areas. And as I've said, we plan to continue lighter efforts in these other areas until conditions or opportunities change. We also plan to assess other categories of high chargeback transactions to see if there's other categories that might be a better fit than gaming that we can pursue and kind of replace that particular item in the growth strategy. So those are the main updates to our strategy. In terms of product and technology, those strategies remain the same, and there's no need to change them based on the markets that we're targeting. And with that, we can turn to market performance. Excuse me a second while I take a drink. All right, in terms of market performance, overall, on a lot of the market metrics that we tracked, Dash did quite well. In terms of usage, we saw higher active addresses per day, higher average number of transactions per day, looking at the median, more active wallets being installed. In fact, we saw 50% growth in active mobile wallets. We saw a greater number of addresses with balances over $1, with the caveat there that we didn't capture the data on January 1st. And so this data wasn't captured until later in the month. The reason that's so important is as soon as the price crossed $100, a large number of private send denominated inputs became worth more than $1. So this is not apples to apples comparison to the previous quarter. But nonetheless, we did see some growth there. We also saw an increase in exchange volume being reported. Payment volume was down, mostly due to the price being down. And the number of economic transactions, although those shrunk, that's mostly due to the effects of prior quarter stress tests that didn't take place in Q4. Private send usage did increase. Again, that number is affected by the stress tests. Because there were fewer stress tests this quarter, it meant that the percentage of private send transactions basically wasn't as affected this quarter. When I compare Dash to what's happening across the industry, it was a particularly strong quarter, because what we saw in all the metrics we looked at was that Bitcoin's on-chain number of transactions were shrinking, as was Bitcoin Cash's, Litecoins. The Lightning Network capacity shrank, whether you look at active or unique open channels or the capacity of the network itself. I think we're seeing a lack of adoption of the Lightning Network. If it were being adopted and used, I think everyone would know it by now. And so overall, Dash was growing in a market that was difficult for everybody else. Of course, price was not our high point for the quarter. The market cap of Dash dropped by about 38% and remained challenging through most of the quarter. You know, I'm hopeful that the worst of it is behind us, given the dramatic rebound that we've seen so far this year. More metrics are available in the appendix as well. After the quarterly call is over, I encourage you to go back there and take a look at those metrics. It's the same metrics, but it does lay it out quarter by quarter for the last 5 quarters, so you can see the trends. Graphically, we're displaying some of those trends here so that you can get a sense of the growth that we've seen throughout 2019. Active wallets, median economic transactions per day, mobile wallet installations, all of those metrics are trending strongly in the right direction. Market cap saw some ups and downs during the year, and you know, certainly was very affected during Q4. And of course, we've rebounded quite strongly so far this year. So overall, I think it was you know, a lot of great progress in the right direction for us, and you know, in a very difficult market. And the price does affect our ability to grow. When you talk to people and the price is going down, it's more difficult to get them excited about using Dash. In an up market, you see the opposite happening. And so to grow like this during a very difficult quarter like Q4 was, I think it really speaks volumes to the value that we're bringing to the marketplace. Next slide. All right, so with this, I'll turn it over to Glenn. He'll walk us through Dash Core Group's financials so you can get a view into our financial health and what we're doing to manage expenses.
Great, thank you, Ryan. Hi, I'm Glenn Austin, the CFO of Dash Core Group. I'll provide you with an update on our full year 2019 financial results. First, some disclosures. All of our accounting is conducted in USD to provide a stable picture of our financials. And since we are using mark-to-market accounting for our holdings of Dash, we aren't reporting in accordance with US GAAP. Okay, so this is what we're going to cover today. First, we're going to go through the balance sheet, looking at our reserves as of the end of 2019. We'll also discuss how we plan to deploy the funds on our balance sheet on behalf of the network in 2020. Following that, we will review the income statement, where we will go through our compensation and non-compensation spend. This will be more of a standard look back at our expense structure in 2019. Finally, we will summarize how 2019 went from a financial perspective and take an early peek at how 2020 is shaping up. So let's start by reviewing the balance sheet. Total assets slightly decreased 12% year over year to $1 million. A full 55% of our assets as of December 31st resided in core team salaries. That account held $546,000. Of that amount, roughly $63,000 is related to compensation accrued in December that hadn't been paid out as of the end of the year. Additionally, we have to take out another $240,000 for the expected salary payments for January 2020. After those two adjustments, the overall reserve in our compensation account is roughly 1 month salary expense and needed to be replenished. As a quick reminder, kind of the minimum amount of salary reserve we typically feel comfortable with is 3 months salary expense in USD. With the price of Dash at $42 to end the year, we're facing a large gap in our funding from the network versus what our compensation run rate is, similar to many other projects in the Dash ecosystem. Based on our low reserves and the low price of Dash, we had to make several difficult decisions. First, we called for volunteers throughout the organization to take a lower salary or no compensation at all. So in addition to the 3 volunteers we already had, another 7 came forward for a total of 10. And they volunteered to reduce or completely eliminate their compensation. At the beginning of January, we also had to reduce the team by 3 due to budget pressures. With the combination of volunteers and headcount reductions, we were able to bring down our monthly compensation from $250,000 to roughly $200,000 a month. Throughout the month of January, the price of Dash went up. And with the recent spike in the price of Dash, we are looking forward to rebuilding our reserve as long as the price stays above $80 per Dash. Moving on to business development. Most of the $169,000 in business development has now been committed to integrations and promotional activities that will occur over the next 4 to 5 months. We received funding from the network at the end of December 2019 and don't anticipate needing additional funding for this category until late second quarter 2020. On the marketing and travel front, we ended the year with a balance of $85,000. Roughly half of those funds have been committed to a developer meetup, 2 new marketing videos about Dash, translations for our website and wallets, and attending a couple of conferences. We plan on submitting a proposal to the network during the March budget cycle to fund our conferences strategy for the balance of the year. The legal budget will be used for monthly legal expenses as well as our engagement with regulators in New York and a couple of countries in Asia. The legal funds we deployed during the last couple of years paid off in the fourth quarter of 2019, with the Crypto Ratings Council rating Dash a 1, which means that Dash has no to little resemblance to a security. This is the highest mark possible. And this potentially will open up new markets for us, including the critical New York market. We also saw a stop in exchanges announcing they would delist Dash due to privacy concerns. So our campaign to educate exchanges and regulators on private send has been proven successful. So with kind of that clarity around both our security status and private send, I believe we're now on solid ground to address concerns any jurisdiction may have around either topic. And we're well positioned to demonstrate that from a legal perspective, we are no different from Bitcoin. So I'm very proud of the work we did last year on that front, and I'm optimistic that we'll continue to have success in the legal and regulatory space in 2020. On the bottom of the slide, we have our liabilities. We had $94,000 in accrued liabilities that had not been paid out as of the end of day December 31st. As mentioned, roughly 2/3 of that amount is related to salaries accrued in December that were paid out in early January 2020. And in 2019, we generated net income of $29,000 after tax. Next slide, please. All right, so now let's go through the income statement. Dash Core Group received revenue of $4.25 million from the Dash network in 2019. This is 42% less than in 2018. revenue exceeded expenses before exchange losses and taxes by approximately $400,000. At $3.1 million, 77% of our expenses were related to compensation. Compensation expense was lower by 36% compared to 2018. And if you kind of compare our compensation run rate from its all-time peak high of $485,000 per month in the third quarter of 2017, we've now reduced that category by roughly 60% to our current run rate of $200,000 per month. So this was achieved through a combination of volunteers offering to work for significantly reduced salaries, headcount cuts, as well as not backfilling any subcontractors who leave the project. We had $764,000 in non-compensation expenses in 2019. This is also drastically less than what we spent in 2018. These expenses were professional fees, business development, rent expense, marketing and travel expenses, as well as general administrative expenses. Overall, I would say we did not have a healthy balance of compensation versus non-compensation expenses in the year. Ideally, we would like to have the split approach 50-50 in the near future. In 2019, we did recognize a loss of $129,000 as a result of depreciation of Dash held on our balance sheet. This loss is generated by a timing difference between receiving the funds from the network and the lag it takes to liquidate the Dash in the open market. As a policy since 2018, we have been liquidating the remainder of Dash we received from the network over a 1-month period. We also paid out our federal and state taxes in the third quarter of 2019 in the amount of $247,000. Our tax liability for the fiscal year 2019 was generated by aggressively rebuilding our compensation reserve starting in March 2019 all the way through June 2019. Since our fiscal year ends in June, we generated taxable net income. Through 7 months of the current fiscal year, due to a fall in both the price of Dash and our overall reserve since June 30th, we have not generated any taxable gains for the fiscal year 2020. So as mentioned on the balance sheet slide, net income was $29,000 in 2019. So in conclusion, where are we now from a financial perspective? We finished the year close to a multi-year low in the price of Dash. With dwindling reserves, we had to cut some of our workforce. And additionally, on the non-compensation front, we allocated funding only towards necessities. Fortunately, in January, we saw a rapid and significant increase in the price of Dash, which restored stability and health to our financials. At current prices, we'll be able to replenish our reserves over the next couple of months, and so that we can withstand any future potential downturns in the cryptocurrency markets. Overall, our financial health is now stable and it's continuously improving as long as the price of Dash remains above, around $75 per Dash. So that concludes the finance portion. Bob, I'll be handing it over to you now for the technology update.
Great, thanks Glenn, appreciate that. It's always a pleasure to walk through the roadmap. This is the similar format that we introduced in our Q3 call, and we'll walk through 3 different product lines, really representing the rows on the roadmap from a mobile perspective, platform in the middle, and Dash core and backend types of functionality on the bottom row. So it was a great quarter across the board. If we look down the left-hand column, the first column as far as Q4 accomplishments, it was strong deliverables in each of the groups that I think are monumental and set us on a good path for 2020. In the mobile team, we were able to continue our work after announcing a strategy definition, kind of more focused strategy in the previous quarter. We were able to work on making a uniform user experience across both Android and iOS. That included pushing our iOS release into beta in the fourth quarter and really enhancing the design to tie in the new branding and improve other areas of user experience. As we move into this first quarter on the mobile team, we've now released fully in production iOS v4, so a major release that was released a couple of weeks ago, and have continued to update that as needed, and we'll continue to work on features and maintenance throughout this quarter on that. We'll be looking forward to the Android release. That'll be V7. In Q4, we released 6.6.4. Very strong performance on that. On Ryan's slide about mobile wallet installations, a large percentage of that growth was due to some of the Android features, as well as the Cryptphone release and support of that. And so this quarter, we'll look forward to production release of the next major version, which includes that uniform UX and redesign. All of those redesign efforts are what we had announced in the previous quarter. Again, it was focused around branding and uniformity across platforms, across the two native wallets. And yet the work also continues in earnest on Dash Pay, which is the next version of the wallet, which would include support for identities, contactless, and we'll look forward this quarter to a working demo of that. Got another slide with some screenshots from the designs that you can look at today. In the fourth quarter for the platform team, we had set a goal to deliver a testnet version of the basic components for accessibility, DAPI, Drive, and other functionality. That was met right at the end of the quarter as we targeted. We had a open house at the early part of early part of December, where we heard in technical detail from some of our lead developers on the plans and the components of that, as well as a presentation from our product owner, product manager, Dana Alabrandi. So that was a big push to get that out. We also included the SDK at that point in time, and documentation on a new documentation site for that to support it and really help introduce it and gain familiarity with the development community. In this quarter, we'll continue to deliver incremental releases of what we're calling EvoNet, which again is a public test net. It's not our main test net, as we're trying to protect the interests of our third parties that have integrated already with the platform and rely on testnet for their production and pre-production testing. So with EvoNet, we'll continue to have releases this quarter. I'll talk about some of the features on that on a following slide as well. After we made the big push to get that delivered, we did have a meetup where the development team, specifically around platform, was able to get together. I know this is a Q4 retrospective, but it's hard not to introduce some of the activities that's already occurred in this first month of the new quarter. So that meetup's been completed. That focus was specifically on road mapping, estimating the effort, defining releases, defining the major epics, and looking at design of various components. So I'll touch on Dash Platform a bit more on the next slide, but a fantastic fourth quarter deliverable and a good start in Q1. As far as Dash Core goes, it may not be represented on the slide, but we did have two maintenance or point releases in Dash Core 0.15 on mainnet. Most of those were in reaction, very swift reaction to some security concerns with some Bitcoin vulnerabilities that were introduced that affected our product as well. So appreciate and kudos to the team for being able to deliver those quickly.
To clarify, those were point releases on version 14.
Correct.
I think you said 15, but it was 14.
Thank you.
Yeah.
And so that was good. We also did some cleanup along the way as we had those point releases, as there were some things that we felt could add some value on private send and some other optimizations that were happening. The majority of the work, though, was on getting 0.15 to testnet. And that included not only some of our enhancements that we had in the queue, but also a major effort around upgrading the user interface to the Qt wallet, or our desktop wallet, which is, we've had a long history of requests on that. hadn't been prioritized for a while, and we were glad to pull it in. I think you'll be happy with that as far as updating the look and feel there. And then a significant amount of effort in just catching up on syncing with Bitcoin backports. And so we were able to get up through the entire code stream of Bitcoin version 0.15 in our release to testnet. So that testnet release hit in December. We have, that was our first beta version of that. We do now have a release candidate, which is RC2, which hit testnet this week. We believe that that is going to be our release candidate. We are obviously going to let that set in the testnet environment for a couple of weeks. We'll do some partner communication so they can do perform testing, and then we'll work on migration to mainnet. So mainnet is solidly lined up for a Q1 deliverable this year. And you can see some of the enhancements there. In addition to the V15 mainnet release, we're also now doing work on what will be our subsequent releases, which could be dot releases or major release. We don't know at this point. And that work that's underway already includes backporting features from Bitcoin V version 0.16. Some of our future enhancements for core will be centered around, really split into two groups, I would call it. One is support for platform features. So as we need to handle some of the capabilities of Dash Platform, there will be some core dependencies on that. And so that will enter into the scope of work for the core team, as well as whatever outcomes happen from our store of value discussions that we're having. Those were kind of obviously will have some impact on core, which will feed into our feature set. And one thing that you don't really see from the roadmap is kind of our behind the scenes process of prioritization, identifying enhancement requests, and working together as a team. We call that our value team. I think there's some exposure to that in the appendix of the deck as well. But as we continue to have needs come in, those are some of the things that will come into our value team for discussion and prioritization. On the next slide, we'll dive into Dash Platform a little bit more and talk, this is largely pulled from a blog post when we released on EvoNet. As far as the capabilities that were delivered, that really serves as the foundation, which was overall access to the platform. All of the features that we had committed to up front, as far as distributed decentralized storage, AKA Drive, as we had called it for quite some time, the access to that data via our decentralized API or DAPI, the ability to register identities. We have over 1,000 identities, usernames registered at this point in time as we've been testing it out. So we're excited to see that adoption and that push against it. And as well as the SDK out there. I'll talk a little bit more about the documentation on a following slide, but that was also a big push for the team. So now that we have the basic components out there working, obviously it's in development still, and so we need to set proper expectations with the development community of what still needs to be developed and delivered, and in what order on that. So this slide doesn't represent the incremental release by release roadmap. I'll talk about the roadmap before I finish this slide, but this is really just kind of the buckets of work that still need to take place. And a big portion of that is around securing the platform. So how can things be done in a secure fashion? How is signing going to happen as far as data goes between nodes? And so a ton of work that needs to happen around securing. We also need to build in all the incentivization. How are fees going to be calculated? How are rewards going to be calculated and distributed? And other things like recovery mechanisms for identities, and how does all of that work with proof of service on layer 2 or the platform layer. And then, and again, these are not necessarily sequential, but just kind of buckets of work. Another body of work also is around resiliency and really readiness. And so those include maybe all of these may not be pushed into MVP to get our releases out, but how do we provide that resiliency to the platform? How do we provide some of the flexibility that we'd like to see in there? So you see the comment about feature flags. So as we introduce new features, how can we make that the least disruptive to the network? And so we'll be balancing out some of these things as far as speed to market versus disruption and ease of deployment, disruption and ease of maintenance, and pushing new releases out. So we're off to a great start. We would encourage anybody and any developers in the community to reach out to Dana as our product manager on this, to engage in the conversation and continue to provide us input and push on this. So we're excited about that. As far as the release schedule goes, the overall intent is frequent releases. Right now we are in some discovery that's determining whether these will just be time-based releases at a set frequency that will just continue to just push things out. Again, that's a balance between the disruption to the community versus the transparency of the work that's going on. Obviously, there's transparency in the repos, but that's not necessarily where everybody wants to go to find out what work's been happening. So one of the ideas that's being tossed around is, should we be doing releases on a set monthly schedule? Whatever's in line that's gone through QA, it's ready for release. Or do we want to bucket it up and make sure that there's business value associated with each one of those and that they have logical components to it? Those are some of the internal discussions I'm sharing with you as a community, and we'll determine what's going to be best for us overall and holistically. On the next slide, I'm excited to introduce just some of the designs that have made through the approval process. Although we put the disclaimer on there, they're still subject to change, but we have these are well-established designs that we've been working on. Not for, as I mentioned, these new releases of iOS and Android that are now being delivered in Q1, but this looks then to the next release where we're really delivering on Dash Pay. Just a quick description on these to set some context. On the left-hand side, a screenshot is really a homepage. It has quick actions for buying and selling and scanning as you're interacting with other users and wallets, and a quick access to an activity feed on there. As you can see, fees, transactions, usernames, dates, and very easy to read feature, as well as your balance at the top and avatar. So we love the UI. I think there's been a lot of excitement generated internally as we've gone through this process. We know what platforms and backends we're delivering this for. Again, native iOS and native Android. And we've really cleared up quite a bit of the direction and path forward internally over the last quarter and a half. The second screenshot is representative as a notification after a username's been registered or on the Dash network. So that's a notification screen. Third one is the contact list, separating in between contact requests that have come in, ability to quickly handle those, as well as separated from overall contact lists that can be easily scrolled through to find those who you'll be paying or receiving from. And the last screenshot is a drill down. For instance, once this contact that was in the contact request now becomes an actual contact in your contact list, and you interact with them, you'll be able to quickly see the history and interact with them directly, sending and requesting. So we're excited about these. As I mentioned before, we'll look to this quarter as an opportunity to perform a Dash Pay demo, which would be against EvoNet, which would be combining these designs and seeing it in a working fashion. So look forward to that. The final slide that I wanted to share today is just a reminder of what was delivered in Q4 as far as documentation, which represents a shift as far as how we're delivering documentation to our development community. We have created what we are referring to as our developer portal, which can be accessed at dash.org/developers. And this should be quick access and really your first stop if you're in the development community to find out what we're doing with the project, how you can get involved, as well as getting into documentation or getting into the repos directly. screenshot on the right is our live documentation. As you click through from the portal to the documentation, there's two sides of this. One is the Dash platform documentation, which supports our testnet release, which we'll keep up to date. And it's in a searchable, very usable and collaborative environment. We're within a content management platform that will actually allow, and we are requesting feedback and participation from our community. So by logging in, making changes, i.e. comments or suggested changes directly in the text, those will be sent to our documentation team for review and approval, and we can easily accept those and we can incorporate your changes with the click of a button. So we're very excited about the flexibility and power that that provides. We're also very excited about the level of documentation that's there to support this first EvoNet release of Dash platform. And knowing what platform we're building on and the efficiencies that this has brought to us. The Fez has done a fantastic job on the technical documentation in the past. In talking to him, he's pretty excited that he doesn't have to do builds on the repo to actually generate a new update to some documentation. So it's a very fluid process. And again, we're kind of focused on some efficiencies here. The other side of the documentation site is the Dash core documentation. So all of it has been migrated in preparation for the V15 mainnet release. It has been out there now available since mid-December. So we got it out there ahead of time, and you can click back and forth on the header there. V15 is also still available through our old documentation site. So that will be the version where they'll be synced in parallel. And then we're going to migrate and launch, this will be our launch pad from that point forward. So any maintenance releases, dot releases, or major releases from this point forward will only be on, those changes will only be made on the new documentation site. So we're excited about the work that was done. That was a team that you'd recognize, but love the work that Strophe did on that as well. And the Fez in particular, led by Dana again on that. So I think we're set up well. We've got a lot of the pieces in place. We have a lot of development work to do, and excited about the road ahead for 2020.
All right, thank you, Bob. So next up is the growth update. I talked a bit about this during the strategy session, section, but here I'll focus more on giving some examples of some of the integrations that we saw during the quarter. In Venezuela, we announced Burger King as an integration at the end of December. CryptoBuyer's solution is the one that's being deployed to Burger King. And it's being tested currently at one location. The testing is going well. And I believe that the client is very happy with it. And so that will be deployed to all 40 locations shortly. It's on initial launch. Dash will be exclusive for a couple of months before other cryptocurrencies on CryptoBuyer's platform will be available. And so we'll get a head start on availability within Burger King compared to many of the other currencies that are on that platform. We also attended the Latin American Bitcoin Conference, where there's a growing awareness of Dash throughout the region. We were pleasantly surprised. And we were able to make connections to a number of new potential partners, including exchanges and liquidity providers that can assist with our expansion of our infrastructure within the region. We also continue to encourage growth with our existing partners. We do that through joint activities. In one such example, we held a Black Friday promotion, and you see the logo for that right there, that we ran in partnership with Church's Chicken. And so with many of these headline type of integrations, making that very publicly viewable has really helped with our branding. Lastly, in the fourth quarter, Dash was integrated into the initial launch of Venezuela's first crypto ATM back in October. So that was really a milestone moment. Prior to that, the legality of these things were kind of in question. And so a number of different ATM operators are now functioning there. It seems like this is a new service type that is available to grow. There are already, as I said, several other ATMs in the country, and Dash is being integrated into all of those integrations, just given our prominence there. On the trading front, we were added to Indodax, which is the leading exchange in Indonesia, with rupiah trading pair, the fiat currency in India, or in Indonesia. And that's another exchange that supports instant send deposits. We are exploring how the combination of a fiat pair and instant send can be leveraged to enable a remittance solution for Indonesia, as we've done with the infrastructure that we added in Mexico. And so this is a very large remittance market in Asia, and we think that there are opportunities to build that out. VCC is a Vietnamese exchange that added Dash. We're currently working with them to add a fiat trading pair and instant send capabilities. So, the integration came first, but we'll continue to try to expand our capabilities there. Current pairs include BTC, USDT, and Ethereum. And so hopefully we can get a fiat pair added there soon. Gate.io is a Chinese exchange that already had Dash listed, but I think that China is a market that awareness of Dash is probably lower than most other geographies. And there we held an AMA that was very well attended by Gate.io users, and several hundred traders and investors joined for that AMA with the aim of driving awareness for Dash. That's the type of activity that we'd like to do more with existing partners in order to help kind of take advantage of the infrastructure that's already there. And then CoinTrade, that's a new Brazilian exchange with a fiat pair that was brought in by the Dash Brazil team. Dash Core Group's role was to work with CoinTrade in order to enable instant send on the platform. So at this point, Dash is now integrated into all four of the most important exchanges serving the Brazilian market. And it really has been a strong market for us, and of course complements our remittance strategy and our Venezuela strategy because of the migration that's happened with Venezuelans moving to other Latin American countries. Next up is Abra. Abra is a trading platform focused on ease of use. It allows for connections in a large number of countries. And then BBOD, this is a zero-fee futures exchange. And what they're bringing to the table, they've launched the world's first Dash perpetual futures quoted and settled in TUSD. That's a USD stablecoin. The new derivative contract is now trading on BBOD with up to 25 times leverage. In our remittance category, we held a meetup in Argentina to identify potential partners in fiat on-ramps in the country. We held a meeting and contacted all of the major exchanges and other service providers in the country. We had about 25 attendees, spoke to exchange general managers, remittance company operators, OTC trading teams, and potential Dash community organizers in the country. And so we hope to close on some of those opportunities in the first 2 quarters of 2020 and expand our presence into Argentina. That, of course, is also a major remittance corridor back to Venezuela. And as a follow-up of enabling the Dash Mexican peso pair Cubobit and Dash Mexico worked together to deploy Remittances, which is a remittance solution and provides a cash out option for receiving remittances into Mexico. As I mentioned, that effort was spearheaded by Dash Mexico team and took advantage of the infrastructure that Dash Core Group had built with the Cubobit exchange. And finally, we have CryptoWorth. It's an accounting platform and services that are specifically for cryptocurrencies. Integration into services like these don't tie into any one strategy, but they're certainly important for any of these businesses to have options and services to be able to adopt Dash with less friction. And CryptoWorth is one of the ways that we're doing that. And so that's a question we often get is how can I use accounting services and things if I'm going to be accepting Dash? Excuse me for 1 second. So with that, we can move to the outlook. Obviously, things are looking up for Dash in Q1 with the price run that we've seen. And that has had an effect on the market, not just in terms of price, but in terms of confidence, in terms of interest on the part of exchanges, on the part of liquidity providers to participate in the Dash ecosystem. We've been one of the best performing coins of 2020 so far. And that has driven a lot of trading volume and exchanges that have instant send enabled. We're able to point to those now. We've been gathering data from exchanges both before and after their instant send integrations, and we can show at this point that there is economic value and trading value to the exchanges for integrating this. And so I think that what we're seeing is kind of the network effects of the instant send enabled exchanges beginning to take hold. And I see that continuing, if anything, growing stronger, because every exchange that we add isn't just at one additional exchange, it's an additional path between that exchange and any of the other exchanges that have instant send. And so we're delivering a lot of value with that, and we are seeing the anecdotal evidence from some of our partners that this is really beginning to take hold as a strategy. I think focusing a lot on Venezuela and remittances is also beginning to have a network effect as we start to onboard more remittance onboarding points and cash out points. The number of corridors that we're opening up is beginning to really explode. And we're doing that through partners who are building a business on remittances using Dash and are marketing to their consumers, reaching out to new consumers, holding meetups in order to teach people how to use the solutions and really driving that business for us. And that's really important. And so I think that all of our strategies that are really working well actually complement one another. They aren't standalone. They really benefit as we build out each one of those. They help all of the others to be more successful. And so that's what's really exciting about doubling down within the areas that we're seeing the most success, and why I think that's a better use of our time from a business development standpoint, from the money that we're spending on business development, from the promotions that we run. And it really allows us to focus our marketing efforts more intently on those areas as well. And so I think there's going to be a lot of benefit in the focus that we're starting to show in the areas that we're seeing the most success. In terms of the market overall, a lot of people have been questioning whether or not the Bitcoin halving event is fully priced in. In my own opinion, I don't think that it is. This isn't something I hear taxi drivers talking about quite yet. But I have seen metrics that show that searches for the terms Bitcoin halving have been increasing. I don't think it's being picked up by mainstream media yet. And yet the price of all crypto assets have kind of been in a growth mode right now. I certainly could be wrong on this, and I've been proven wrong before, but I think that 2020 is set up well to attract new people to the space and have a reason for them to believe that right now is a good time to get involved. And so I also look at the fact that Bitcoin's dominance is about the highest it's been in 3 or 4 years. And so when you combine those factors, I think that the altcoin market is well positioned to kind of perform quite well in 2020. I think that Dash is one of the few projects that is showing consistent growth every single quarter over the last year and a half or two in terms of usage. None of the other major cryptocurrencies that I've looked at metrics for can say the same thing. And so I really believe that the actual use of Dash's network has been climbing, and that positions us well, I think, going forward as the market begins to mature and really understand what is delivering value. And so with that, I think I can turn to the topic of the day, which is improving Dash as a store of value. As I said at the beginning of the call, kind of the extra topic I wanted to take on for this quarterly call is discussing kind of the path that we've been on here. I recognize that these slides are probably very difficult to see online. We will share these slides afterwards, and I will talk you through kind of what you're seeing here. Coming out of the store of value discussion that I introduced back in December, I was challenged with some of the assumptions or some of the assertions or some of the hypotheses that I had presented during that presentation. I think the anecdotal evidence and kind of walking through the logic made sense to people, but they wanted to know if that was absolutely true. Do I have statistical data that would back that up? And so I went through a process of really testing all of my assumptions and some of the potential pushback on some of the analyses that I've done. I kind of anticipated what the next set of questions might look like. And I'd like to share some of that research just to bring people along on the same journey that I'm kind of going through as I analyze what the issue truly is, what the opportunities are, and try to quantify this in a more tangible way. So what you see on the slide here is kind of a set of analyses, and the details at the bottom are not important. The message at the top is, and I'll kind of, as I said, share some of these afterwards. The first is I wanted to establish factually that there is, in fact, a correlation between the change in circulating supply, which is a concept that many people disagreed with, and Dash's market performance relative to the overall cryptocurrency market. And the reason I chose relative performance is because I wanted to take the noise out of the market overall and, you know, the 2017 event and the bubble that ensued and popped. I wanted to take that noise out and really demonstrate that there is a correlation. And what I found is that there is a moderate correlation between our performance and the change in circulating supply. When there's a lot of investment into masternodes and a lot of those coins are taken out of circulating supply, we do tend to outperform the market. On the other hand, when masternodes are shutting down and we're also producing new coins on an ongoing basis, the circulating supply can grow quite quickly. And during those times, we have a tendency to underperform the market. Now, this is not the only contributor to our relative market performance, obviously. Things like software development, adoption, marketing efforts, a number of different things can affect how we perform in the market overall. But what this statistically shows, using a very large sample size, or a large sample size, I should say, is that there is a correlation, that this correlation is real. Now, one of the things that I anticipated is, well, correlation is not causation. I needed to establish that there was a cause between masternode ROI and that resulting in the behavior of buying masternodes and acquiring Dash for collateralizing nodes. Because one other potential explanation is, well, there's a correlation because at the time when Dash is delivering software and differentiating itself in some way, that both attracts masternode investors and results in a price increase. And so I needed to show some independence there. And what I've done is conduct an analysis to say, all right, knowing what the masternode returns were the end of quarter A, would the subsequent quarter result in investment within Dash masternodes? And that would show causal relationship between the return of running a masternode and the resulting behavior. And what I found is that there is an even stronger correlation between those metrics. And it's strongly correlated with a result of a change in Dash's price. And so not only does it result in the behavior of people being willing to invest into a masternode, but that investment then results in a change in the price. And so it's very clear that the hypothesis is true, that masternode returns do result in behavior change, which does result in price support. And at times like we've gone through over the last 2 years, when circulating supply growth has been very high and masternode investment has kind of stagnated, it does affect our price. We have very high inflation rate of circulating supply. And I think this data reinforces the fact that that is true. So if we can go to the next slide. One of the issues I saw with that analysis is that Dash's, or the masternode ROI historically was highest back in 2014 and has declined over time. And so one of the criticisms you might be able to say about those previous analyses is, well, Dash's historical ROI of operating a masternode was highest in the past when the price was lowest. And as it has matured and grown and the price has gone up, you know, and the ROI demanded has gone down, of course there's a correlation there. But that correlation may have more to do with time and maturity of the project than it has to do with the ROI itself. And so I analyzed whether or not that correlation exists even after taking into effect or taking into account the effect of inflation itself. And so what I did is I analyzed the headline masternode ROI and the ROI net of dilution. And just taking an example here on the left, back in 2014, late 2014, the headline ROI was 22% of operating a masternode, which sounds fantastic. But when you took inflation into account, inflation was around 27% of the overall supply of Dash. And so net of inflation, masternode owners, even if they were 100% operational, were being diluted at a rate of about 5% per year of the overall coin supply. And so when you look at it through that lens, it's been a lot steadier. And so masternodes are not completely irrational. They seem to take into account the effects of inflation. And what I did was I ran some analyses to determine, well, where is this all going to converge? As you can see, the headline ROI in the blue line is declining over time. But the real return of operating a masternode is actually getting better over time. Masternodes are being diluted less and less as we move forward. And those two are converging on each other. And the data seems to indicate that they're weighting more towards the headline ROI than they are the ROI net of inflation. And that seems to be converging on a number somewhere between 3 to 5% over a very long period of time. That is where it's looking like they will converge. And so one of the assertions that I had put forward during my presentation in December was that it was unlikely, it seemed to me that it was unlikely that ROI demanded by the masternode layer of the network would continue to decline. But I think that assumption was wrong, or as I've analyzed it, I think it will continue to come down. It'll just continue to come down at a very moderate pace. And so what you see on the right is that same headline ROI that is presented on the left, and a projection of where the data seems to predict that it will head in the future. And so it will continue to drop, in my view. It just will drop at a more moderate rate. What does this mean? Well, it means that many of my projections that I put forward about the future may have been overly pessimistic. It means that the extent of the issue is a little bit smaller than I'd projected. And that's good news. That means that probably less dramatic of a change to our economics would have the intended effect. And so I've really moderated my view as I've continued to analyze the data and continued to analyze the data available to us on historical patterns. And I think that a small portion of the issue would be addressed through this moderate reduction in masternode demand ROI. So if you can flip to the next slide. Mining reallocation effects. One of the things that we've basically taken off the table at this point is moving to proof of stake. We've analyzed kind of the implementations that are out there. There's new vulnerabilities that have been identified with proof of stake. And despite the fact that Dash has chain locks, which would make us immune to many of those vulnerabilities, chain locks are not 100%. They're not guaranteed on any given block. And in fact, if there were a major network disruption, it's possible that they would stop functioning for a period of time. And so we felt like it was more prudent to stick with proof of work, a proven consensus mechanism that we can fall back on. But it does beg the question, how much should we be spending on hash rate? Does it make sense when we have chain locks protecting us to continue to expend the exact same amount we did before we had them on hash rate? And to me, the answer is no. I think that doesn't make a lot of sense. When you've built a more secure system, you shouldn't have to continue spending just as much on your backup mechanism in order to adequately provide security. Chain locks provided a lot of value to the network, and I believe that we can capture some of that value in a safe manner. So one of the things that I wanted to share here is, well, what other X11 hash rate coins are there out there because we want to remain the dominant chain. As it turns out, Dash has not only a supermajority, but almost all of the X11 hash rate. We have about 97% of the hash rate for X11. And that gives us ample opportunity to reallocate some of this in a very safe manner that doesn't give up much incremental security at all, and captures a lot of the value of the expense of hash rate. Idle mining capacity is largely technically obsolete. We do have a lot of mining capacity that's sitting in boxes, but it would be difficult to deploy that in an economic fashion because of the new generation of mining equipment that has come out. That equipment is more efficient. It can be scaled up through additional manufacture. And I don't see a scenario in which obsolete equipment would be usable at some point in the future. And so I don't think it can be economically deployed. I think that the risks associated with a reduction would be low. And if performed slowly over time, a reallocation would allow additional time for that technical obsolescence of the mining equipment that was produced in the peak of 2017 to begin to migrate out of feasible viability. And so I do think that we have a lot of room to play with here. And we'll talk more about how that might happen. Next slide. So we're beginning to get our arms around what elements a solution might look like. We presented a lot of different options at the open house that we would be investigating. I think we've managed to eliminate a number of those. I have had the opportunity to engage with the community through a number of different channels, including our forum and Ask Me Anything earlier this week with, on the subject through Reddit. I've interacted one-on-one with a number of prominent members of our community, really anybody that had reached out through Discord and answered questions, listened to what they had to say about what they would support or not support. And that has helped really narrow this down. Of course, we're also speaking with researchers. You know, we've had a debate on one of the YouTube channels with Darren Tapp, kind of batting back and forth some of the pros and cons of proof of stake. There's just been a number of different engagements that I've had, even with some of our major miners, to kind of discuss the pros and cons of some of these things. And so I'm starting to get a good sense of what the community would support, and at least I think I am, and what developers feel is out of scope and so on. And we've really narrowed it down. And I think that this is a still emerging solution. I'm not going to say this is the solution because we have a lot of work left to do. But the emerging solution, I think, looks something like this: a combination of a reward reallocation, broader participation in those rewards so that regular users can take advantage of them and see their own inflation rate that they experience go down because they're able to participate in some of those rewards, and flexibility in our proposal system. And so let's kind of dig into each one of these. The first is the reward reallocation. Currently, when you take out the proposal funding that we have set aside of 10%, the block reward is split 50-50 between miners and masternodes. And I think that we can move from that split today to a split of roughly 25-75. How did I arrive at that number? Well, if you look at the other X11 hash rate out there, I think not only did we want to be the largest, we want to be the largest by an order of magnitude. And so I took the sum of all the other networks running X11 multiplied it by 10, and then roughly doubled it just for some extra measure of security. And I think that, you know, we don't need to go to much of an extent beyond that to mitigate the financial inflation rate that we're seeing that's relatively inflated. And so I felt like that was a good compromise. It retains a hell of a lot of security for our network. If we transition to that over a long period of time, you avoid shocking the system with massive amounts of investment to drive masternode creation. You buy yourself a much longer runway for inflation to come down to a more moderate level at some point in the future. And you end up with kind of a much softer landing in 2026 when this kind of runs its course, by which time inflation will be a lot lower. And then lastly, it significantly dampens the circulating supply growth without introducing the risk of a price spike and subsequent crash that we saw kind of during the 2017 period from the events that unfolded at that time. In terms of broader participation, trustless masternode shares seem to me to be the most pragmatic approach to doing that. And the reason I say that is, you know, we looked at some of the other options that we presented, such as a deterministic holders list or something. Those don't scale very well. Masternodes, on the other hand, are a concept that is well tested, well understood, and wouldn't require a lot of effort in order to modify to be able to allow collateral to come from different places and have that signature come from different places. We can also leverage existing technology with special transactions in order to register a particular input as eligible for collateral. And so the way that this might look is that any smaller amount would be eligible to participate in the masternode collateralization. Masternode operators would be required to nonetheless contribute a significant portion, maybe it's 100 dash, of their own funds in order to kind of aggregate other people's. And that's to align their incentives, that it puts skin in the game. What we didn't want is, or what we don't want to have happen, is to have masternodes operating with other people's collateral and have not much skin in the game to keep that up and running and generating returns. It's cheaper to run it on my home computer. And if the internet goes out, oh, well, it's not my money that I've lost as far as the rewards go. And so we need them to have skin in the game too, so that they're going to host it in a very professional environment. And if they don't, they will lose out on a significant amount of rewards themselves. So that would really incentivize high quality hosting. We want shared nodes not to be vote eligible because of the complexities of implementing that, and also due to the scalability of our current voting system. It would not handle hundreds of thousands of votes very well. And so unless we can re-engineer that, these would simply be participating in rewards. And then collateral providers would have the ability to name their terms. How much am I willing to walk away for how long, and what share of the rewards am I expecting? And that would allow a market to develop around how much is the operator's time and effort worth, and allow that to kind of determine what share they should get versus the community. We don't want to do that centrally and tell people, well, operators get to keep 50% or something. I think it's better if the market kind of decides what that service is worth, and it can change over time. And then the last one is proposal system flexibility. So what would this look like? Well, the current proposal system, of course, has a 10% cap, and anything unused, I've heard the term burned get called, but in truth, they just never get created. And as I pointed out in December when I talked about some of this, and I think it resonates a lot with masternode owners, that there is a hazard there, that there's a feeling that I have to use up the available budget. And what I think is a healthier dynamic is creating some type of trade-off, that there really needs to be value to fund something. And the way that that might look is that any quote unused funding from proposals would be the funding that goes towards miners and masternodes, using that 25-75 split. And what this would allow is, during the times when the price might be low, the network can choose to invest for the future and receive less rewards for themselves in order to help us grow more quickly. And at times when the price might spike, like we saw during 2017, we don't feel the need to run out and fund anything that's asking for money. That has to be value there. And so it can allow time for the network to develop those teams, develop trust with those teams, and build out good methods of deploying those funds. And in the meantime, kind of capture the value associated. So some tangible examples will maybe help with this. In month A, if 4% of the available budget for the month gets allocated to proposals, that would simply be subtracted from the available budget for the following month. And 24% would go towards miners and 72% towards masternodes. In another month where a lot more is being funded, perhaps 12% gets approved, that would mean 22% for the miner and 66% for the masternode. And it creates that healthy trade-off where a proposal really has to be valuable before a masternode community of masternodes is going to approve it. And so I think that something like this makes a lot of sense. There's been a lot of debate about whether or not any cap should be there. A lot of people are uncomfortable with that. Maybe there is a compromise in between where we cap it at, say, 20%, and it would provide a lot more flexibility to the network without risking a scenario where 99% of the budget gets allocated and our mining security drops to an unacceptable level. And so I think that there's some debate that still has to take place around this. This seems to be something that is resonating a lot with the community. Of course, we're going to have to hold a formal vote on each of these components, but this is what I think the right answer is starting to shape up like. Not everyone agrees with me, even within the team, but I'm putting forward kind of what I kind of see as something that the broadest set of people I think can support. And so I look forward to more debate. If we can flip to the next slide. I want to talk a little bit about what kind of an effect the models that I've built are beginning to show might have. You might be familiar with this slide from my presentation back in December. If you haven't seen it, that is available on our YouTube channel. But what this is it's a comparison of what the annual money supply growth is for various assets. And this was as of last month. So I didn't modify it intentionally because I wanted to keep consistency with last month's presentation. But BTC is currently at 3.6%, as are the other BTC forks. Litecoin is currently at 4.1%. And I would note, by the way, that Bitcoin is about to go through a halvening event. And the market does seem to value those as well. Reduction in inflation is generally viewed as a good thing. USD money supply grows at about 6% historically. It's growing faster than that now, around 7%. Dash, its headline number, grows at about 7.5% currently. My projections from last presentation were for about 18% over the next 3 years for our circulating supply. But that assumed that masternode ROI demanded by that masternode layer of the network would remain at about 6.5% or so. With these modified views of moderate reductions in ROI, I think that it's going to be closer to 13% if we do nothing. And I think under this proposal, the 3-year average would come much closer to the supply inflation that we currently have. And what this would do is basically buy us time until a point in the future when our base would be much larger and the emission rate would be much lower. And what that means is the issue would be largely dissipated by that point in time. And so I've done projections around all of this. My goal is to package all of this up in a very consumable fashion and share that through a presentation with the community, the opportunity to ask questions and have me kind of answer as many of those as I can, take feedback and kind of continue iterating on this. But I think kind of we're headed in the right direction. I think the issue isn't quite as severe as my initial analysis assumed. And I think there are some moderate steps here that we can take that don't compromise our security and dramatically improve the economics on our network and deliver value to all participants. So with that, kind of next steps. As I said, continued engagement. I want to test the model and analysis with additional experts, including some of the researchers at Arizona State University, as well as other experts that I'd like to reach out to. Do a formal presentation to the community, share those findings, share the models themselves and the assumptions that went into them, have people beat on it, and then formal decision processes for each protocol change. We're going to have to do those on the network to get these things approved, and then we'll start work on them. It is possible and healthy if competing proposals were to be put forward. I welcome those, both from within the team or the community, to the extent that they directly compete with the changes that we're proposing. We would cooperate with those other entities to structure some type of bake-off voting process. I think that it's healthy to have alternatives if there are alternatives that a broad set of the community could support. And I certainly don't assume that there is only one way to skin a cat here. So, I welcome that type of alternatives that people could work on and try to garner support for. So with that, I think we can wrap things up. That concludes our prepared portion of our remarks for today. Thank you for listening. We hope that it was informative. And as with past quarterly calls, we're now going to go into a question and answer slide. And I'll remind you once again that there is an appendix in the slides that we'll release after the call. You can browse through those, get a better idea of some of the things we're working on, drill down into some of these metrics over time and so on. So Robert, do you want to take things?
Sure. Thank you, Ryan, for the comprehensive explanation of the store of value topic. That was a good one. So we have captured several questions from the forum and Discord and Twitter. Those are presented on the screen. And in the meantime, Michael captured a few of them also from the chat on the YouTube. First, we'll start from the questions from the forum. The first five are tech related. So Bob, probably those are dedicated mostly to you. Let me start from the first one. Do DCG Core developers plan to spend more time engaging with other blockchain experts to discuss things, sharing, learning, feedback, and at the same time getting exposure and understand what the market went, where the market went?
Yes, great question. I would say that you're doing quite a bit of that already. Most of that is online. as we've reached out to developers of various projects, I'd say that we are actively bringing that back. We're comparing what other projects are doing to our approaches, and even taking advantage of some of the libraries, and at the lowest level, even algorithms from other projects. So I don't know that we'll be spending more time. I think the question's probably posed from the standpoint of, are we spending enough time? And I think that there's a healthy balance there. We're not doing this in isolation. We're not trying to, despite the fact that we are creating a new product and a new platform and trying to do it in an innovative way, we're not doing it in a vacuum. We definitely want to take advantage of the learnings and the thinkings of other people that are trying to solve the problem as well. And we regularly discuss that within our team. So great question, and thanks for that.
The second question, will implementation of Tendermint protocol allow cross-chain communication, and what is our relationship with Cosmos?
Yeah, as we announced, as people have dug into the architecture that we've adopted for our initial releases of the Dash platform, we introduced a side chain, something to handle all of the data transactions that are going to happen on layer 2, which is separate from our financial transactional chain, which would be on layer 1. And so we have cross-chain communication capabilities that we've built and developed that will allow us to communicate back and forth between layer 1 and layer 2. We're not looking at opportunities right now for cross-chain communication into other projects, into other coins. However, that flexibility would be in there if we decide to implement it.
Thanks, Bob. The next one. For many centralized APIs, the service provider imposes limits on how many API requests a registered user is permitted to prevent abuse. I think that many people will be relying on the DAPI to be reliable for servicing requests. How will the new evolution Dash Drive and DAPI deal with spam and DDoS attacks?
Yeah, we're developing that right now, so we don't have all of the methods implemented on it. It is an issue. We do expect market dynamics and the pricing and the incentive structure to shape this and form this. Obviously, if there's abuse, there should be costs that are associated with it. We've talked about that, what the cost of spam is, and how do we stay above that level. And so we'll be implementing similar mechanisms there, but the exact algorithms and formulas have not been developed there. But this is specifically part of what I outlined that has to be there on both the incentive structures and the security is completely aligned with this. So you can expect more to be heard.
Cool, sounds good. Number 4, how has the testing for Dash platform been going? Are any dApps being tested at the same time? Is the DashPay dApp being tested on Dash platform testnet? Has a timeline been explored for the mainnet releases of Dash platform and DashPay? Many questions are there.
Yeah, that's 4 through 7. That's not just 4. I don't know. You're giving me one question there. The testing's been going well. We've been testing it both internally as well as I'd say a small group, a select group of developers outside have been testing it. There's only internal dApps at this point in time. So as far as the initial EvoNet release, it is locked down to dApps that have been created, or contracts that have been created by DCG. And so the dApps that can be created on that are either being done on private dev nets, which we wouldn't have exposure to. So can't add to that as far as volume, but I'd say the majority of it is around the DashPay contract and that being a dApp. So it's not being tested on testnet, as testnet is known as our public testnet that all of our integration partners can use. there's real value that gets spent on that and real expenses to it. So this has been deployed on a separate testnet, which is called EvoNet, and that's where the development is happening. And as far as the timeline, as I mentioned before, yeah, that is our main focus right now. We're going to commit quarter by quarter to releases. As I mentioned, we're committing to some time-based releases. So you'll see a greater and greater frequency of those. But the testing so far has been going well. We're seeing usernames created. We do have a new environment, so we have a fair amount of work. I didn't mention that, but in all of these phases, we'll continue to have stabilization efforts that go into place. Anytime there's a new release, obviously things are understood a little bit clearer. So right now, even we have a fair amount of items that are coming in to ensure that that nodes are operating properly and that the environment is up and running. But we'll continue to share quarter by quarter what our release schedule looks like.
Nice. Number 5. Has optional privacy on mobile wallets been discussed as a deliverable? If so, is there a rough date users can expect this functionality?
Yes, and what I'll call it is configurable privacy as opposed to optional privacy. We don't think that there's levels of it, right? Privacy is a right that people need to have, so it's not optional. It's kind of a word I take a little bit of caution with. But the configuration of that, yes, that has been discussed. It hasn't been set as our roadmap in the wallet at this point in time.
Thank you.
And the reason for that is the focus on getting Dash Pay out with minimum viable product so that we can begin to enhance it from there.
Cool. Thank you, guys. The next question, number 6. Will relevant Dashcore members consider putting on a group live stream to talk solely about Dash's marketing, branding, Evo marketing for 2020 and beyond? Plus, include some community member questions in the live stream. Fernando, why don't you take this?
Yes, absolutely. Yeah, we would love to do that. Any more specific ideas of what people want covered would be appreciated to tailor that to the community needs. But yeah, happy to do this during next couple months. There's also some new things in marketing that the next 2 questions relate to. So probably those need to be considered too. But yeah, absolutely, yes.
Cool. How does DCG strategy fit into the Dash co-working governance proposal that just passed?
That's still very early on to fully answer. We are going to be working together. We have a workshop next week in Europe, some of us, and we'll work on that more. DCG has its own strategy and several markets that Ryan talked about before. So we still plan to be focused on those. But if this co-working proposal and the members in it come up with other markets that the network should be addressing, we'll help them in addressing those as much as possible, or tackle something ourselves if that is the decision. But again, this was passed a couple days ago, and we haven't still held the workshop, so still a bit early to fully answer.
Cool. Great to hear. And the last one from the screen, number 8, with Dashforce being defunded, does DCG have any plans to fill the void, in particular, the backend work they did?
Yes, I believe this refers to all the things that Dashforce or Dash News did besides the Dash News website and the writing and the podcast and all that, because they were involved in a lot of outreach and PR coordination and communication about our business development efforts. They also have do Discover Dash, and they help with a series of efforts. Again, they were defunded last month, but we all thought they were gonna do a new proposal this month. A couple days ago, they announced they won't, and they are breaking up the group. But the key members have all declared that they plan to stay around. So we're in communication with all of them. Let's see how they can fit into the ecosystem and what they will keep doing, what not. We're talking with them. Definitely many of the things they were doing, we will need to do somehow if they don't keep doing them. But the conversations are ongoing. It's a lot of work that was being done that we would need to pick up. We can't pick up everything, but there are parts there that definitely will need to be covered.
Good. Thank you, Fernando. That concludes the list of questions from the forum and Discord. Let's switch to the...
Given that we only have a few minutes here left, maybe we should cherry pick kind of some of the more interesting questions. I haven't had the chance to go through them, but I think we have time for maybe 2 more questions, and the rest would need to be answered in the document that we'll distribute afterwards. But maybe we can pick some, just a couple.
Sure. Okay. So the first one, our platform developers are great, but do you agree that presentations to the general public about the Dash platform should be done by someone else so we don't get lost in technical details? Or maybe just let Dana to present to the general public, not developers?
Yes, I can answer that. I believe this is asked because of the very technical presentation by some of the developers at the open house. And I agree that with certain audiences, it should not be developers. It should be people with a more business-oriented mind or discourse. The reason for that very technical presentation at the open house was that the audience we hoped some developers would join the open house or the live streaming, and we wanted to capture their attention. The platform is a developer-focused product, so some technical content we thought was needed. Having said that, yeah, for most other audiences, it makes more sense that it's not the developers who are presenting.
Cool. Thank you, Fernando. Maybe just 1 or 2 technical quick questions. I thought we switched to just having our existing wallets to be the DashPay apps. Is DashPay its own new application?
Yeah, I'll take that. I can understand where the confusion comes from, because over previous history, we had talked about DashPay as its own product, as a separate new wallet, new source code, different architecture and language. And late last year, we did adjust that strategy to take our existing native wallets, both the iOS native wallet and the Android native wallet, and evolve those into providing all of the DashPay functionality. So it is not going to be a separate product. As you see on the screen designs that we showed today, it is using DashPay branding on there. And this may facilitate a name change of the wallet when they're actually delivered from Dash Wallet, as they are in the app stores today, to DashPay or DashPay Wallet. That detail is left to be fully defined. However, it is not a separate product, to answer the question.
Cool. Thank you, Bob. So the very last question, also technical and related to DashPay. Is a decentralized merchant directory part of the scope of DashPay?
Yeah, I'll answer that in 2 parts. One, on the client side, in a mobile wallet, would that be part of the functionality? And then also from the platform perspective, DashPay as a data contractor, as a dApp that lives on the platform layer. A decentralized merchant directory is a perfect example of a dApp to be built on top of the platform. It leverages our payment chain, it leverages the people that are using the ecosystem and the network today. Who is going to, right now, that's not part of a defined scope of work to be built. Merchant features are definitely expected to be added to the DashPay wallet and the DashPay DApp. However, something like a merchant directory, I think, is a perfect example for our community to get involved and have a race to the finish on that and say, now that we see the base capabilities of DashPay, wouldn't it be great to write a merchant directory type of DApp that then any wallet could plug into? So, because why should DashPay as a wallet, if we're now talking about the mobile app, be the only one to take advantage of the merchant directory? You'd want not only desktop wallets, but also third-party wallets to take advantage of that as well. So it's not part of our current roadmap. Definitely aligned with our product capabilities, and I'll just use that as kind of maybe one thing I didn't say today, which is this is why we're building it, right? Is to enhance the community, let the community get involved, and build applications and solutions on top of the platform. And so I would love to see more of that come from the community than looking and saying, DCG, what else are you doing for us now? By the way, throw item number 50 or 100 or 200 on the list to then prioritize with, as we've talked about today, a limited set of funding that's available. So great question. And these types of solutions are what keeps us excited every day.
Yeah, great answer too. Thank you very much, Bob. We are running a little bit out of time, so I think with this we can conclude the Q&A session and the call itself. Thank you very much, Ryan, Bob, Glenn, Fernando, for summary of the Q4. Michael, thank you very much for moderating the chat. Liz, Omar, Ernesto, thanks for your input into the slides and the work prepared. And of course, thank you very much to our community members for participation, for your questions, for the great feedback, and all of the support you are always giving to us and to entire Dash community. Thank you very much and have a good rest of your day or night.
Thank you, everybody.
Thank you.
Thank you.